my head hurts, oh, my back hurts, oh, my elbow hurts. Any bump, any little fender bender very easily becomes a $150,000 claim. They squish as much as they can out of that. There's nothing that requires them to prove anything.
Hey, welcome back to Smart Talk, where we help you go from truck to CEO by working smarter, not harder. I'm your host, Anna Tarzubia, and today we're going to talk about something that every mover pays for and definitely complains about when the renewal hits: insurance. So why did your premium go up when you didn't even have a claim? What makes a moving company look risky to insurance companies? And what can you do right now to stop getting pushed around by insurance costs? We're going to pull back the curtain. I'm joined by Gabriel Sarria, an insurance agent who works directly with movers like you, where the risk is never simple. Gabriel, welcome to Smart Talk.
Thank you so much. I'm so happy to be here.
Really excited to have you here. Before we get into all those weeds that I talked about, I want the short version of your story. How did you get into insurance, and especially like this particular niche?
Insurance is not exactly something that most people plan for, but in my case, it really was. My dad has been in the insurance business all my life. And yeah, so I've always been in it because I would go with my dad to the office sometimes and I would just be around it. So that's something I knew that I wanted to get into from very young. Then in college, I did an internship at an agency that was focused on property and casualty on the commercial side. And I realized this is exactly what I'm looking for. Something that I can have, an impact on a business and have it be less personal and more to a business so I can impact more people. So I liked it. I fell into the world of trucking and moving specifically, heavy fleet specifically, because it's a very difficult industry. I like difficulty. I like the challenge of complex situations where I have, something that is not cookie cutter that you can just quote and bind. And this industry is very much that. The larger you get, the more complex it gets. And that's what I've done, all my career.
I love that. You have a niche and you understand it. And I think that's key why we wanted you to come and chat with all of our movers. Insurance it's like part of day one for these businesses. There's a lot of federal regulations requiring motor carriers to carry liability insurance. And really, like most of our moving companies also have to carry cargo coverage, protecting goods they're transporting. It's a lot of intensity when you get into it. So here's where most of our owners get frustrated. They think, hey, I'm paying a premium. I don't wreck a truck and I haven't filed a claim. Why am I getting hit with an increase? Like, what are they missing?
The answer to that question is both macro and micro. So we'll first approach the macro because that helps you and helps your listeners understand what's going on with the marketplace as a whole. Insurance companies have been operating what they would call at a loss, quote unquote, for several years. The reason for that is because the cost of claims and the frequency of claims across the board in all of the United States has been going up every year. There were several years where they were operating at a negative of what they call underwriting profits. So if they got $100 in premium, they were paying out $110 in claims, $105 in claims, $120 in claims. So they were not making money whatsoever. So that what resulted in is a complete market-wide increase of the auto premium. That's specifically to auto. Cargo, general liability, not so much workers' compensation. In several states, you have seen actual declines. But the biggest piece of expense for most movers is going to be the auto. And that's where you have seen these increases that just continue to happen because the system is rewarding that. Not the insurance side of it, but the legislation side of it. Any bump, any little fender bender very easily becomes a $150,000 claim if that claimant contacts Morgan. And before you know it, you have, oh, my head hurts, my back hurts, oh, my elbow hurts. They squish as much as they can out of that. And it really does benefit the people suing. There's nothing that requires them to prove anything. They just have to say that they feel a certain way, and then they get these verdicts. And the insurance companies are the ones having to pay for that. Both the defense, which often is more expensive than the actual claim, and the claim itself. Because that keeps happening year over year, the insurance companies have to increase their premiums across the board. Otherwise, they have to pull out of the market. And we have seen insurance companies pulling out of the market, which all that does is drive the premium up more because then there's less competition. So the companies that remain are able to charge more. So on a macro level, completely unrelated to you as a risk, that's what's happening that is driving the insurance premiums to go up on the auto side. I'll talk a lot about the auto simply because it's the biggest concern from a premium standpoint for your listeners. So that is on the macro side. And each state will have different circumstances and different rates of increase. And then we'll talk to them in the micro side. So what are you doing as a risk that could be driving it up or down? So you may not have a claim, but insurance companies look at several things to rate you and see whether you are, in their eyes, a qualifier for their biggest credits and the biggest premium decreases. There's some things that are completely unrelated to claims that they look at and that you may not be looking at. And, it's the agent's job to do that and enlighten you in that. So what you want to be looking at is your CAP report, your DOT reports, everything. Every time you get stopped, there is a record of that. And the amount of times you don't pass those tests, you don't pass those with flying colors, that gets reflected on a CAP report. And insurance companies are pulling those CAP reports every year. Insurance companies are going to price you depending on their perceived risk. Even if you have had 5 years with no claims, statistically, you will get a claim soon. And they will have to price you accordingly. So they look at 5 years of claims for 5 years historicals. Of course, if you're a younger company, they just look back, as long as they can. But they're looking at 5 year historicals. If you have had no claims in 5 years, you still have a CAP report that tells them what you have been doing over the past 5 years as a company. If you have red flags, that tells them that statistically, the probability that you'll have more claims in the future are higher. Therefore, they have to price you accordingly. So even if you have had no claims, and you're going to see the reflection of the increases.
It's not just, I haven't had claims. It's, could you have a claim?
Right.
And the likelihood of that claim.
Correct. Because insurance companies, premium is just their expectation of the relationship of a perceived risk. If the macro is saying, I need an increase, and there is some leeway most of the time with insurance companies, if you're a perfect risk and you're wonderful, they'll apply more credit. So instead of seeing a 20% increase or a 10% increase, maybe you'll see a 2% increase, a 1% increase, the minimum that they have required for their filings. So those are the reasons where you would see that.
Got it. No, it makes a lot of sense. So they did recently have an accident or a claim. What happens? Like, well, how is that considered?
So it adds to that historical that insurance companies are looking at. The insurance companies will look at your history to predict your future. There's no other way. Every insurance company has their own process, but that's an actuarial process. It's purely mathematical. The underwriting is just a mathematical equation of your history. They have their rates that are defined by the insurance company, and then they give you your premium. That's it. So if you're giving them data points that are positive or negative, you'll have an effect on your premium, a direct effect. So if you have never had a claim and you have 10 vehicles and then you have just one claim, okay, what are the circumstances of the claim? Then it becomes a conversation. Because if it's just one claim, that is within the expectation of you having a claim at some point, right? Statistically, you were going to get it. What kind of claim it was, how it happened, all of that tells you that's it's like an access door that the insurance companies now have to how you're running your business. So if the reason the claim happened is because it was a bad driver and it turns out they had speeding tickets from before, and if those things are happening, okay, that tells the insurance company that the reason this claim happened is not statistic. It happened because you're not hiring the right people, you're not doing the right checks, you're not training the right way. So the effect that it has in your renewal and for the next 5 years, because remember, any claim will stay in your history for 5 years. So it'll affect your profit margins for a long time. It really depends the circumstances of the claim. And then what the insurance companies call remediation. What are you doing to avoid future claims similar to the one that you had? You could learn from your mistakes. Hey, I just didn't know that I was supposed to be on top of my safety. Now I'm going to be doing A, B, C, D, E, F, G. We have had a lot of success in circumstances where, there was a claim and there was supposed to be an enormous increase. And the same insurance company will underwrite it one way just by a regular renewal with no activity, and a completely different way if you tell the story of everything you're doing and how you're now changing. It may be who you were and what caused this, but hey, I learned my lesson and moving forward, actuarially, you can underwrite me as if I didn't have that claim, or if anything better, because now I learned from my mistakes and now I'm doing all these other things.
It's a great example that movers can take, right? Do the work on that, right? Have those materials, but don't just have them, enforce them, and be able to show cases where you have enforced those. What are some of the other common things that you're seeing today that movers are they're either forgetting or they're just not doing?
The main one is taking ownership of your insurance process. So the insurance industry as a whole is a very slow moving, very reactive industry. and very old school, very status quo. And the status quo has a veil of mystery that doesn't allow you to see what's happening behind the doors. The more you pay in premium, the more the insurance agencies make because they make a commission. So the incentive is not really there from a structure to be able to push their clients to pay as little as possible. The only incentive is to shop. And there aren't 700 insurance companies interested in quoting movers. There's a handful of them. Depending on your region, there may be only 3. So it's not about shopping. It's about what are you doing on the back end for you to be the best company for the insurance companies. You can take action from a safety standpoint. For example, perfect little examples like this I have that I see every day. There was a client, they had a lot of frequency of claims because they had a lot of drivers, a lot of turnover. It's an area of the country that is just prone to a lot of turnover. And they were having a hard time keeping them from going over the speed limit and enforcing them not being on their phone. And they had a couple accidents where they happened because they were on their phones. Well, it turns out there's an app that they downloaded and forced to download on every one of their drivers that while they're driving, it locks their phone. And all they can do is talk Bluetooth. So they did that because it's a reflection of their risk, right? So it's not just we have a no phone rule. It's like we're making sure they don't have a phone rule. So those little things like that, those are the things that you want to enforce and take control of it. So that's one of them, looking at their CAP report and making sure that whatever is showing up there, they're actually fixing it. We can tell a story to the insurance companies as to what they're doing better now.
I know we've got a few movers here. They're growing. What about new services and regions, right? What do they need to know about insurance when they do that?
Well, as they're growing, there's a couple things that they got to keep in mind. One is the differences in the insurance companies that are in each region. It depends if they're growing from a region standpoint or they're simply growing from a fleet standpoint. And I'll answer the question in those 2 different ways because it really changes the answer. If you're purely growing on a fleet basis and you're not growing in a region, then as you grow and you have more premium, you'll have access to different kinds of insurance. With insurance, you're financing that risk. It's basically paying for your future claims. That's the concept of insurance. Kind of trickling down through a bunch of people that you all share in this pool for the probability of when you have a claim, it'll pay for that. That's all you're doing. You're financing your own risk. As you grow, though, you qualify for different kinds of financing that risk. Some of those are going to be large deductible programs. If you run a very safe organization and you have very few claims and you're paying, let's throw a number and say $500,000 a year in auto, perhaps you may want to have a large deductible where you're going to have a lot more skin in the game because instead of 5,000 or 10,000, you're going to have, let's say, 50,000, 100,000. But that'll decrease your premium from 500,000 to, I don't know, let's say to 50. So you just saved a lot of money. Yes, having more skin in the game, but if you're confident about your operation and the kind of operation you have and how safe it is, then you run a deductible analysis, which is what we say. Look at 5 years historical. If you would have had this program 5 years ago, what would have been your cash flow differences in there and your profit margin improvements? And then you then make a decision. And most of the time, if you run a safe organization, the large deductible program fits. If you're not, as a person, you're risk adverse and you like to not have a large deductible so that you know what your actual expenses are and you don't have a surprise, there are other options. There's captives, group captives, where you're basically participating in your own insurance company. And similar to what workers' compensation does, that you get dividends, meaning a portion of your premium back if you have no claims. So as you grow, you just qualify for more simply because you're paying more. Then if you're growing from a region standpoint, challenge with that is, depending on the region, you'll have some carriers that they will not be very competitive, let's say in Florida, but they're very competitive in Georgia. Or insurance companies that they will not want to write in New York, but they're very happy to write in, whatever other state. So doing that research before you go in and expand, where it's not simply you just driving more, because if you're long haul, it doesn't really matter to the insurance companies much. But if you're open in an office to do regional and local work in that space, before you do that, check whether it makes sense to have a separate entity for that, because it may make sense to just have an entity that insures Florida, that is insured by X insurance company that's most competitive in Florida, and another the one I have in Georgia stays in Georgia, and you're taking the benefits of your experience in Georgia to underwrite Florida, but you're having it separated so that you don't pay more simply because the insurance company that has in Florida and Georgia is just not good in Florida. They don't like Florida, so they're more expensive here. So you just have to be strategic about how you do that. And
your growth could
yeah,
actually change the risk profile in a positive way for you. Or, don't assume that your old setup is still going to fit, even though you're growing.
yeah,
It's always those like basic business pieces that we don't think about in the moment, but make sure you've got to use it as a strategic advantage. And I really like that you're saying ownership. This is something that you own. And so
absolutely.
take it, be responsible for it. This episode is helping our movers that are listening think differently about risk, about margins, about how they're running their business today. I want you to hit like, subscribe, or drop a comment down below. Let's talk about some of that ownership. I'm a moving company owner right now, and I want to lower my costs, right? Or at least want to get more predictable cost over time. What are the things that I can do right now? These guys that are listening today asking that question.
Okay. So that's a conversation we have every day. It's the pre-hire, post-hire, pre-claim, and post-claim. And I'll go a little bit in more detail into each one of those. Pre-hire is you just before you hire a person, you need to find out whether that person is going to be trouble. I know that this industry has a lot of turnover and it is not always easy. You don't always have, 3 different people that you can call and ask for references, but you have to do as much due diligence as you can to find out who you're hiring, because that'll dictate if you have a bad driver, that driver will have the accident that then they will pin it in your insurance. If you hire somebody that has, and it's not only about auto, it trickles down everywhere in the company. It also happens in workers' compensation. If you have somebody that has a back injury already and you're asking them to lift things, if you are not asking them whether they have a back injury, a pre-existing injury, if you're not doing the testing, having them lift something in front of you, then you will have the issue. It's going to happen eventually. So what do you do pre-hire? Filter as much as you can. And I know it's a high turnover, but what you're spending on taking more time for it, you're gonna save long term because it'll give you more predictability. And do a mock move. Take them and have them drive you through some difficult areas, whether that is driving through a snowy area if it's on the right season, or tight streets, whatever you can. Test them as much as possible so that you can see whether their experience is sound. And, it may not have shown up on their MVR, but maybe they're just crappy drivers. So do the due diligence, the pre-hire. And then the post-hire is train them. Stay on top of them. A lot of it I've already talked about, which is the right training, the right enforcements on the training, having your weekly talks, doing all those things that seem routine. They really do matter because instilling the person and every employee that safety is a very big thing for us. So that it gets instilled in their head, and every worker will continue to remember that. That's going to be what we call the safety character. So what you do from a training standpoint once they become your employee matters tremendously. Then the pre-claim, all right, you're going to get a claim at some point. It's just statistics. What are you doing to prepare for it? Every vehicle should have a claim kit in their glove box so that you can ask the right questions. You don't know how many times I have a claim or I see a situation where they just don't have the information that the adjuster is going to require, the attorney is going to require. They didn't take pictures. They didn't get statements from the person they crashed into. There are sometimes situations where the claim could get settled like that. If you had the right info, and it just gets dragged down through attorneys and months of work, and before you know it, you have $100,000 just in expenses of attorneys, something that could have been fixed quickly.
That's why you have insurance.
Yes.
It's to protect you when the situation happens.
Exactly.
You're actually telling people you guys can actually own the shape of their file.
If you're the best file, it means that you're the safest. It means that your drivers are least likely to get in a crash. It means that your employees are the least likely to get in an injury. So you want that for yourself, because that's wonderful to have a great organization, but also because you're going to be more profitable down the line.
Exactly. It's like having a gym membership doesn't mean you're going to get cut. You got to do the work. You got to do the labor, and it's not fun. Trust me. If you're keen for this, I'd love to just do some rapid fire with you. Like,
let's do it. I'm
1
ready.
sentence answers each. So first one, biggest misconception movers have about insurance.
That you have no control over your premiums.
Got it.
That it happens to you.
And the biggest mistake you've seen made.
Not paying attention and just letting it roll.
How about the biggest lever that movers can control?
Looking at it year round, not just at renewal when you have an increase.
Awesome. And how do they get a hold of you if they need help?
You can email me, call me, Instagram me, LinkedIn me.
Perfect. I threw that in there. And if I was to just slap a keyword over the top of this episode, Take ownership of your insurance. And I now just learned a bunch about myself because I've got my own insurance premiums that I'm paying. So I'm sitting here thinking like, gosh, what am I not doing? But I hope our movers are thinking the exact same thing. Yes, this is a cost of doing business, but it is also a reflection on how your business is actually operating and the leadership that you're putting in place to make sure that you're operating a really great lower risk company. Not no risk, lower risk. And you can actually control that. So run tighter systems, get those documents going. Make sure you've got the right advisor. Make sure you've got a Gabriel. Gabe, any last words of wisdom that you'd like to throw out there before we tell the audience bye?
It's not just about me, it's about making sure that whoever you pick, just interview them and make sure that they are ready to do the work. Because a lot of the things that I talked about today, we are doing that on their behalf, a lot of it. The preparation, the paperwork, and the choosing the right companies to work with. It's not you alone doing all this. It's not like I'm telling you to take ownership of the pre-hire, post-hire, pre-claim, post-claim, and do all of that yourself. No, your agent has to be doing the great majority of that. There's going to be some things you do. I cannot go in and train your employees myself. But a lot of that has to be your agent. And they have to win if you're winning. They have to lose if you're losing. If your premium goes up, they cannot be rewarded. We do a different system. We sometimes use fees rather than commission because that takes away me benefiting from you having more premiums. Be very careful about who you're working with because they could be helping you save a bunch of money and add money to your bottom line.
This is your partner in doing business,
Yeah.
and helping you reduce that risk and make some wise decisions when it comes around to it. Gabriel, this was amazing. You're a wealth of knowledge. And I think this is the most fun I've ever had in my life talking about insurance. So thank you for making it fun for me. And for
Oh,
our
I
movers,
tried.
hey, if you guys want more conversations like this that really help you go from truck to CEO, make sure you subscribe to Smart Talk. Drop stuff in the comments. Really excited about this one, Gabe. Thanks so much for joining us. We'll
Oh,
see
man,
you
it's
guys
been a
next
pleasure.
time.
Thank you so much for having me.
Thank you.